So, you know what's worse than losing money in the stock market? It's losing money when the markets are just fine. No crash, no recession, just your mutual fund deciding to take a wild bet and you paying the price for it. Sounds unfair, right? But that's what happened to investors in Nippon Mutual Fund, with a staggering 1800 crore vanished in thin air. And yet, the fund house still managed to walk away with profit. You see, when we invest in mutual funds, we usually assume that it's in safe hands. But what if I told you, in this case, the risk wasn't just the market, it was the fund house itself. So a few years back, Nippon India Mutual Fund was still known as Reliance Mutual Fund. They decided to invest in something called additional tier 1 bonds issued by Yes Bank. I know it sounds complicated, but here's what you need to know. The 81 bonds are high risk, high reward way for banks to raise money. So if the banks do well, then great. But if the banks do bad, these bonds can be entirely written off. No refunds, no recovery, just gone. So now you'd think that a fund house so big as this would think twice, right, before betting on something like this. But between 2016 and 2020, they pumped in a massive 2,850 crore into these bonds. But then in 2020,
China has identified the cause of the
mysterious new virus.
Coronavirus.
COVID happened. Yes Bank was in deep trouble. RBI had to step in, and as part of the rescue plan, these 81 bonds were written off. And investors, their wealth wiped out. 1800 crore down the drain. But here's where it gets interesting. While regular investors took the hit, the fund house was completely fine. And not just fine, they actually made 88.60 crore in management fees from these transactions. So SEBI took one last look at this and said, wait a minute, something doesn't add up. They started digging and found signs that this wasn't just a bad investment decision. There might have been a quid pro quo involved, a backseat deal, a mutual fund understanding with Yes Bank. Basically, the kind of things that benefits everyone except the investors. So now SEBI has sent a showcase notice to Nippon asking why they shouldn't return the money they earned in fees and why they shouldn't face suspension. Meanwhile, the CBI has also joined the party, investigating the entire deal and its connections to companies owned by Reliance Capital. So what's the takeaway here? Because we hear this a lot, that mutual funds are subject to market risk. But let's be honest, sometimes the biggest risk isn't the market. It's what's happening behind the scenes. Because while you're busy checking NAVs and performance charts, deals like these are happening in boardrooms. As investors, we trust fund houses with our money. But truth isn't blind faith. You have to ask questions. Are they taking risks you never signed up for? Because see, at the end of the day, market can go up and down. But one thing should never crash. That is your trust in the people managing your money. So if this made you think twice, share it with your friends and family so that they can get a lot more informed about what's going on. And if you found this video informative, do subscribe because we post these kind of videos every week. And if you want to stick around for more finance content, then you can watch these.